This is Market Week Live, March 1st, 2024. Information and support for traders and investors. Welcome, everybody. We're letting people come into the room right now, and the room is filling up. Absolutely great. Great to see all of you here. Just a little bit of legal information right over here, and it just says that everything we bring you is for entertainment and educational purposes only. It's not investment advice, and you should always consult your investment professionals before making decisions. And of course, if you're an active trader, investor, you can also consult with your own trading plan before making those decisions. Our host today, we have our full analytical team. Me, Steve Miller, been in this business as a trader, analyst for the last 50 years. Matt Serpe, Avi Ramachandran, Katie Ignastos. They all round out this great analytical team. You want to learn more about us, please go to askSlim.com. And you can then go to About askSlim up in the top, meet the team, and you can see the interviews that we did, and you learn more about us also. Everybody here, an expert in cycle analysis, the best cycle analysis team that there is in the world. Of course, that's my opinion, but I know. All right, so let's move over to our contact info. If you have membership issues or website issues, or you want to know about memberships and stuff, you can write team at askSlim.com. Matt at askSlim.com is where you write if you want to have ask questions about content, information on their education and analysis, first-time specials and upgrades, and we're going to show you a special coming up in just a little bit of time. In this show, I'll bring you my opening comments in the market, and then all the hosts are going to bring their trade planning ideas. Each one is going to share a trade idea, and you'll learn our total approach to trade planning. It's very comprehensive, and if you're a first-time watcher in here, you're really going to want to see how we do set up these trades. Matt is going to do a review of askSlim services. He's going to show you a special that we're offering today. And then we'll have our express round Q&As with the team. And this is for level 1 to 4 members. So the people that are actually included in that Q&A have been invited into this workshop, into this show. And then you can ask questions. If you're not an askSlim level 1 to 4 member and you want to participate, give us a try. At least become a level 1 member, and then you can participate in the Q&A. I'm going to remind all the participants right now, if you have questions on analysis or any other questions on our services, trade planning, trading issues, those type of things, yes, you can ask questions on trading issues. Put that in the Q&A right now. And we'll get to that in just a little bit. And then I'm going to bring you the stock market analysis. I'm going to take a deep dive into the S&P 500, which is again surging to another all-time high. And I'll also bring you a market condition monitor. You'll be able to see the conditions of the market and some select stocks. So that's what we're going to bring you today. Here's my opening commentary on the market, little brief comments that I have for you here. Well, stock market, even though it's up pretty big right now on the day, it had a mixed week as a few of those Mag 7 tech stocks began to falter. And more warnings came that the Fed was not going to cut interest rates very soon, and that had the market a little bit cautious. There's a Apollo chief analyst out there. He came out and said there will be no cuts for 2024. Well, that's a little stingy. I don't agree with him actually on that, because I think that there will be a couple of cuts this year, at least. Interesting point, the GDP came out, the revision for Q4. So the GDP grew, as it normally does. We're not in a recession. GDP went up by $334 billion for the fourth quarter. Sounds like a lot of money, right? But the U.S. deficit grew by $834 billion. Yes, the U.S. GDP grew by $334 billion. The deficit grew by $834 billion. That's a pretty bad return on my money, your money too, don't you think? Sounds like a waste of $500 billion to me, and deficit spending doesn't bring the kind of return that they want you to believe. PCE came out. That's the most watched inflation indicator by the Fed. Year over year, it was up on the core about 2.8%. They expected 2.9%. So it was just a little bit better than expected. And what happened was that the bond market got firm on that news and interest rates started to fall a little bit. I'll tell you a little bit more about that. I think we're pretty soon going to see some lower rates in the markets. Friday, the news came out that NYCB, that's the bank in New York, down another 25%. That puts it down over 70% in just a month's time. Yeah, they have problems out there, and they say that they didn't have good risk management, and they're badly affected by commercial real estate. And there are huge problems out there in commercial real estate. And there's more of that coming. We're going to see more banks in trouble, and that, of course, is going to shake up things, and yields will then be coming down, and I think soon, based on that. Now, when I say that, it's market yields, I think, will be coming down, not the Fed. The Fed is going to remain stingy for a while, and the Fed will not cut rates, especially in any significant way, unless the stock market is falling very hard. With the stock market still surging to the upside and tech leadership now, as we've seen, pushing the market up, that is shifting. As we see all of the semiconductors putting on huge gains. We could stop talking about the Magnificent Seven right now. There is no more Magnificent Seven. You heard it right here. Google, Apple, Tesla. Those three stocks that were in the old Magnificent Seven are down for the year. Yes, we've seen these nice gains in the stock market, but those stocks are no longer leaders. And each of them have their own problems for sure. As Apple, well, their revenues keep going and to the downside on their iPhones, and they're not innovative. And Tesla having huge problems out there as the EV market is struggling in a big way and competition is coming up. And Google suffering from, well, ad revenue softening. And those are the important aspects of those companies that are causing problems. So that whole AI bulge that we saw in those stocks, well, that's over. Apple trying to shift out of their own electric vehicle initiative back into AI, but it's not going to work for them, and we're going to see more trouble in Apple. And our team has been all over that with some negative commentary and trade setups, so kudos to them. But now Broadcom and Micron and AMD and Applied Materials, they're taking over, moving up, joining Meta and Microsoft and Amazon and NVIDIA to the upside with crazy valuations. Those are the leaders. And you see SMH, the semiconductor index, moving up to a new high also. So that's what's happening now. The leadership is shifting. And that's keeping the indexes looking very good. But once this euphoria is over, there will be a sharp downside. That is natural, as corrections do come in the market on a regular basis. I know it doesn't seem like it now, as the market is driving to the upside. One other thing important to say is that the market's being driven to the upside right now by the semiconductor stocks. I have seen so many times where there was euphoria in the semiconductors that ended really badly. What happens is that semiconductors are a product that can be commoditized, and that happens. And once you see that changing, where a lot of companies are catching up and all these chips for AI, they're being manufactured by more and more companies, then you will see that there is a quick downside move in that group, and they will be leading the markets then, not to the upside, but on the downside. Let's look at a couple slides here that I think are very important. I've shown a number of times the issue with saturation in the market, and that's what we have going on right now. This is a chart of the top 10 stocks by size versus the entire U.S. stock market. And you can see way up over here, the market cap concentration of the last 10, where it's 75% of market value. Wow, that is incredible. You have to go, well, you could see you got up over here close to it in 2000. And yes, the relationship between the top 10 stocks and market valuation and that saturation is even more than in the bubble back in 2000 before the dot bomb bust. And way over here, you could see as we're getting into the Depression and the rally in 1929. Well, that's where it popped over 75% again. This doesn't mean that this is going to happen today. What it is a warning of that there's going to be a long-term shift in rotation at some point where they come out of those stocks. One more important thing to look at in here, in case you want to know what stocks are doing that, is this. These are the top 10 stocks by market cap. And you can see 8 of them are in the tech category. Berkshire Hathaway is a stock that is a conglomerate. Of course, they have some tech, but they're really a conglomerate. And by the way, Warren Buffett has got the biggest cash position ever in the history of Berkshire Hathaway. And he says, people are crazy where they're buying stocks right now. I'm paraphrasing. And that he is saving his bullets. And you can see Eli Lilly and Company, and that has been a monstrous move, like to 150% up based on its weight loss drug. Yes, there are a lot of big people around here in this country and other countries that are using that, and that has really pumped that stock to the upside. But again, there are other weight loss drugs. And before you know it, somebody's going to come out and say why that's really bad for you, and you should actually learn to eat healthily. And then the stock like that will be coming down. But I wanted you to see this is the craziness there. These are the top 10 stocks, and they are the ones that are pushing the market to the upside. 8 of the 10 in the tech category of those stocks that are just absolutely incredibly 75% of the whole market cap. Never been this kind of saturation except just before the Great Depression. Amazing stuff to look at. So, like I said, when this changes, there's going to be a long-term rotation. Money will start coming out of the techs and going into other sectors. And even with a sharp correction that I see coming ahead, A1 is still the story. Those stocks in that category probably are still going to be moving the market to the upside. I would say the bull market peak from this bull market, this cyclical bull market, is probably coming late 24 or early 25. And we're going to see waves of buying in those tech stocks again. I don't think it's over with, but I do think that when it does change, you're going to feel it, because I think there is very, very soon from now some big volatility coming in the market as they start to unwind some of those huge positions that they have in there. I actually believe that, sometime in the next 6 weeks or so, we'll probably see a downside day in the S&P 500 of over 100 points again. That wouldn't surprise me. Of course, at this point, that's only a 2% down day. We have 3% down days. We might see one of those also. Here at midday, here on Friday, March 1st, stock market, we'll call it mixed to higher. We have slight gains in the S&P 500 and the NASDAQ. That's less than 1% on the week. The Russell approaching 3% gains as the small caps are doing better than the rest of the market right now. And the Dow is actually slightly down on the week. Bond market, it has an up week as 10-year yields fall by about 5 basis points. They're at 4.21% right now, and that's on the NYCB debacle that's going on. But I think that we're about to go into a sizable decline in interest rates in the 10-year market. And I have a objective by May, a target of about 3.9% to as low as 3.6%. So we could get a pretty good bond market rally. When the bond market rallies and interest rates come down, the correlations are that the dollar falls, the euro currency moves up. That is all the correlations. Dollar is small for the week, but I think the dollar will have a sizable move to the downside soon. Oil is surging, and our analysis has to change. I looked at that today, and RV and I have been going over the big demand that is coming in for the products. That's a heating oil and gasoline, and that's pushing oil up and shifting things around. 4%, $4 gain on the week, now over $80. And our members are going to see those revisions coming in the charts pretty soon. And I'll show you the revision in the gold chart in just a few minutes. That is my opening comments on the market. If you want to watch this show, premium members, you're sent the link to participate. So you can come in and you can ask questions. And free members or non-members that are watching on YouTube, you can watch on the YouTube channel, but you don't participate in the Q&A. So again, become a level 1 member or higher if you want to come into the show and be a participant. We really encourage you to do that. If you're brand new, get acquainted, you could actually get our information for free every day by going to the front page, signing up for Snapshot Lite, and we'll be sending you Matt's great work every day on the S&P 500. On YouTube, subscribe to our channel, click that notification bell, like this video, give it a thumbs up, and follow me on Twitter, or X as they say now, at askSlim. Questions on our memberships, info, anything that we are offering in education and analysis, all the questions you have on that, Matt will answer that for you. So write to Matt at askSlim.com. Trade planning with the askSlim team. From analysis to the trade idea. What we do is bring you our sum of the evidence analysis. What does that mean? Well, we put together cycle analysis, our proprietary indicators, evaluating the momentum, support resistance levels, how things act around support and resistance levels, and our projections. We put that all together, and what that gives us is a sum of the evidence analysis that allows us to find the most likely occurrences in the market, and that's what we bring you. So I'm going to bring you analysis in gold right now, which in the beginning of the show I said looked like it had changed, and now it's setting up as a long. So this is intermediate outlook that I'm going to show you. And then Katie will bring you Deere, a short trade, intermediate term outlook. Arby's going to bring you Google, a short trade for a short-term outlook. And Matt is going to bring you Square, which is a long trade for a short-term outlook. A little bit confusing when you hear that. Well, we're going to clear it up for you right now. All right, so I'm going to look at the gold market. For those of you that are brand new, this is cycle analysis, where we look at the energies in the markets. On the left is the weekly chart, on the right is the daily chart, and we've had a little bit of shifting here. And you can see specifically on the daily chart right here, where you see that grayed out, or what we call ghosted cycle bracket, and then the dotted one, which is where it has shifted out to the right and a little bit longer. Each of these yellow ovals that you see are the periods where it is late in the cycle. That is where money flows out. So this is a declining phase, a bottoming phase, a rallying or positive phase, and then the peaking phase, which occurs over here. The shape of the cycle is very important to us. The momentum conditions are very important. I have our momentum indicator here on the weekly, which is the reversal scout, and you could see it turning up right over here. And I have the slim ribbon over here, which has been very choppy. When you see the slim ribbon just kind of sitting on itself, it's not giving much in the way of indicators. But when you see it widening and moving up, you can see how positive it is. And when it's widening and moving down, it's negative. And the bars are colored red or green, depending on if it is positive or negative. On the bottom is a slim ribbon PO, and this gives you a good example of how choppy the gold market has been in this corrective period. Let's blow up the weekly chart right over here. And we have upgraded this, and you could see this note, we slightly widened the cycles and shifted slightly to the right. So what does that mean? Well, you can see in here as we look at this that the big cycle right over here, or the dominant one right there, is broken up into 3 minor cycles. And you can see 1, 2, and 3 and how that lays out. And now what has just happened is that the first cycle in here extended out just a little bit. That did have me confused, though I said that the likelihood of an upside move is pretty high. I thought it was a second half story, and it still very well may be, but at least now for the intermediate term, this has improved. So if you look at the first of the 3 minor cycles right over here, you can see that that looks pretty similar to what we had here, except this was more of a triangular formation. In our cycle analysis workshop, which you can learn about by going to our front page, you can see that what happened in here is that the minor cycle, when it came down, was meeting the upside forces of the larger one right over here. That is why a triangle formed. As this corrected, but it couldn't go down far, as it came down to close to that 50% retracement and then began to move up. And then it broke out of the triangular formation, which tells us that this new cycle is taking over, joining the upward pressure right over here. It's not exactly what I had expected right now, but that's what's happening, and we are agnostic. We let the market tell us what's happening, momentum improving, breakout of the cycle pattern, now in rising phase, and this means that it's likely to continue higher. Now, resistances over here, 2120, that other peak at 2152, the 78% extension, 6.8 extension right over here is at just under 2200, and then this one way up over here is at around 2290, close to 2300. So any of these could be hit right now on this upside. You can see the buying coming in. If interest rates go down as I expect and the dollar goes down, you could expect that gold could go up very sharply in here. So this is a very bullish occurrence when you look at this. So now I'm looking at the shorter term in here, and you can see how this lays out. And again, there's that shifted cycle. The next period of risk begins sometime out over here in late March or early April. So there's a pretty good window for advance right now. Again, this level right over here is at around 2117. It was 2120 on the weekly chart. And this one way up over here at that other resistance is at around 2170. I think there's a pretty good shot that it moves up to 2170. So the question is, do you buy it today? Do you buy it now under these bullish conditions? Or do you wait? Do you wait for a pullback? Well, that's a hard one for me to say. All I can tell you is that everything I'm looking at is that the momentum is turning positive on the weekly. The cycle is turning up. The momentum here on the daily has gone from bearish to neutral, but has not turned positive yet. And I simply believe that any down days in here are going to be false and temporary and likely to move up again. So I think 2120 to up here to that high of 2170 is a very reasonable expectation over these next several weeks. And then some sort of a pullback over here, potentially with a buying opportunity, and then moving up again. You can see I have the peak set over here on the weekly sometime early April. And when I look at this cycle right over here, that one has a trough way out in May. So that says to me that this whole cycle, the next one out over here, could also be a very good upside move. So it could correct over there and be powering to the upside again. So I say this period over here in late March, early April is another buying opportunity. Either way, you can buy it now, you can wait for downticks, you can wait for this buying opportunity over here, but then you face a potential for a runaway market. This is turning into quite a bullish condition. Once this daily turns green over here on the slim ribbon PO and the slim ribbon then begins to widen, that will be an indicator that this could be an upside runaway. Bullish intermediate conditions here in the gold market. That's what I have to say about that. And I'm going to turn this over to Katie. Katie, show them Deere.
Okay, let me share my screen. Let me know when you can see that.
There we go.
Okay, so let's start by taking a look at the weekly chart of Deere. On the bottom here, we have a 23-week cycle bracket with a weekly cycle timing window that's coming up between April 15th and May 24th. Now let's look at what happened in this last completed cycle. We got a move up out of the cycle low, that low being confirmed by the turn to positive momentum with our proprietary reversal scout. That's this green and purple ribbon. So Deere got back up to this area of prior cycle peak, some really strong resistance there. You can see that it's rejected from that level multiple times, right around $450. So strong resistance there. Then we got this bearish engulfing candlestick on earnings, and the reversal scout turned negative. So that helped us to confirm that the cycle peak was in place, and Deere declined through all the supports, including the 78.6% fib, almost back down to this cycle low support. So the depth of that decline suggested probabilistically that Deere would not be able to make a new high in the next cycle, which is the cycle that we're now in. And you can see that that has played out with Deere rising out of this cycle low up into this resistance zone that was created using the prior cycle high and cycle low. Then momentum turned negative, and we have given up the whole move. Last week, Deere dipped briefly below the cycle low support, and now trying to get a bit of a mid-cycle bounce. However, based on this pattern and the negative momentum conditions, we would expect rallies to fail, and we have an initial projection down to about the 61.8% extension. That's around 348.25 out in that weekly cycle timing window. So now if we switch over to the daily chart, I will zoom in a little bit. On here, we have a 44 bar cycle, and we are just moving up out of that daily cycle timing window. So this current cycle is due to end in mid-April, excuse me, which is inside the weekly cycle timing window. Therefore, this cycle is in sync, and you'll see that noted in the in sync box of the cycle low timing tracker. So what that means is that this cycle will be expected to exhibit weakness, possibly even breakdowns, as we form those intermediate and short-term lows. So this prior cycle here was basically flat, ending right where it started. And based on that, we created a resistance zone using that prior cycle high and that cycle low. And that resistance zone is here, and it runs from about 373.50 on the bottom to about 386 on the top with a 78.6% fib. It's not drawn in here, but it is at about 395. So we would expect Deere to try to rally up into this zone and then for that rally to fail and move back down. Again, our initial target is this area between the cycle low support at about 353 down to the 61.8% extension off the weekly chart, 348.25, possibly lower. Please do note that Caterpillar, which has a much stronger pattern, is also due to trough right around this same mid-April timeframe. Now, in terms of askSlim tools that I use to identify this trade idea, first, as I mentioned, the in sync box on the cycle low timing tracker. Second, the Slimulator ranking system, which shows a directional bias in Deere of very bearish. Third, the Slimulator momentum tracker, which also shows a directional bias of very bearish. Fourth, if I switch over to the area chart, we have the OBI down here, the option bias indicator sitting at N3, suggesting a bearish bias. And fourth, the market condition indicator, that is this down here, it is sitting at negative 71 today. So if you'd like to learn more about these tools, please become an askSlim member. Now, in terms of option strategies that you could employ to take advantage of this bearish hypothesis, I would suggest long premium strategies since Deere has low implied volatility right now, and those benefit from a pop in implied volatility. So you could do something like a long put or put spread, put zebra if you have enough capital, even a put butterfly. About an hour ago, I published an options trade idea for this analysis for our members, which was a put diagonal spread. So if you would like to see that video, you can also consider becoming a level 3 or 4 member. And I will hand it over to Arvi.
All right. Thank you so much, Katie. Great job with that. Let's go ahead and pull up Google. So you should see a weekly and daily chart here of Google with the weekly on the left, daily on the right. Let's pull up the weekly chart. So this is interesting. This is also, quite clearly at this point formed its key intermediate term cycle high right there. And we're looking for this to pull back as it's doing and overall sell off further. On the downside, there's a 61.8 to the 78.6, 133.12 to right around 128. Not unreasonable to really see 128 going into when this weekly cycle low is due. And that's due 318 to right around 429. Okay. We shift over to the daily chart. You can see that this has clearly now turned down. We are watching for bear flags to form and for a rally up into this zone right around 140.60 to 144 or so. If this moves through the 78.6 at 146.60, this would be a loser, and we would be looking for it to turn back down and sell off into this zone here from right around 133.26 to 132.12. A daily cycle low is due 322 to right around 4.5 here in Google. So that's our overall look here at a short-term 1 to 3 week trade idea in Google, and I'll hand this off to you, Matt.
All right, thanks, Harvey. Great job, team. All right, I'm going to share my screen. Okay, so in my segment, I'm going to take a look at Square, symbol SQ. Before I get into that, I want to take a quick step back. And as traders, we have to be able to wear multiple hats. We are scientists, we're analysts, and we're strategists. We have to be able to integrate these skills so that we can devise an objective methodology, apply that methodology to produce technical evidence, and then be able to convert that analysis into a trading plan. And that's what you're witnessing as the askSlim team goes through their process. There are no certainties. However, your methodology should put the odds of your trade setup in your favor, and then you have your money management rules to control your risk. So as Slim mentioned, I'm looking at Square here. I have a long side bias and a 2 to 4 week outlook. On the top here, I've posted a little sticky note that we focus on a lot here at askSlim, and that is our trade planning process, the questions, the outlook period, the directional bias, our key levels. And then once we have that sum of the evidence, does that then suggest we actually have a tradable edge? And then what signals are needed to suggest that setup is a go? So I'm on the weekly chart here of Square, and I'm going to step through why I have a long side or bullish bias. What is that technical evidence that is suggesting that this is the case at this time? So number one on the weekly chart, I'm going to actually back this up here so we can look at what happened here in Square, which had a massive sell-off that started in essentially 2021 of around August, and that lasted more than 9 months as it completed here out in about June, and then had gone sideways for about another year. And then we had basically a capitulation sell-off here that ended in late October. Well, what's happening now is that there has been a significant positive repair that has taken place in this most recent cycle that I'm going to zoom in on here, which is giving me the conviction of the overall bullish bias. So you can see here that we finished this cycle actually in a negative overall configuration and structure. However, in this rising phase that occurred in this new cycle, it was extremely bullish, and we actually repaired the negative overall structure when we came through that 78.6, which I will draw here from the swing high here of the prior cycle peak down to that swing low where the trough occurred. And you can see that we had multiple weeks on a closing basis above that 78.6, which had repaired then that overall cycle structure. On the pullback that we have had still during this overall rising, now peaking phase, it just got into that that first part of the support zone that we identify on the weekly chart. And more recently, we have seen the reversal scout weekly momentum indicator turn up as Square or Block released its earnings, and we see that momentum again turn up. So the overall, some of the evidence here on the weekly chart is with this recent cycle peak resistance breakout, overall cycle structure positive, momentum positive. We now have an overall bullish bias on the intermediate time frame. And I'm going to go over now to the daily chart. And it's within the daily chart that you can really get a sense of the more granular details. And this is really important that you are capable and have access to the right charting time frames and indicators that match up to your outlook period. So as I mentioned, I'm looking at more of a short term, but still 2 to 4 week outlook. And if I'm doing that, I really want to get into that daily chart time frame to be able to see some of those deeper details. So what we have going on here in the daily chart is that we wrapped up this daily cycle here, and it was fairly it was very, very choppy scenario here. And we actually had a early low that came into place. We had one up day, and then we exploded higher on earnings. So that earnings report has pushed it above the prior cycle peak, both on the daily and on the weekly, shifting that cycle structures positive. Overall momentum now on the daily is also positive. You can see how, as Slim mentioned too, once that slim ribbon starts to expand out, it really does then let you know that something has changed and there's a strong momentum trend in place. So we would expect that slim ribbon to act as support if it does pull back into there. Right now, it's really holding and consolidating that initial rally explosive pop gap that it had off of earnings. So now what we're looking at is, I'm looking at here, since we are still in the early rising phase, essentially, there's a lot of time in this cycle for to continue in its upward advance. And that upward advance, that up leg has likely already started in that intermediate time frame. So over the next 2 to 4 weeks, I'm looking for a move into this first projection zone of around 87 to 90 with an outside chance as you get further out, maybe into that 3 or 4 week period of getting up into the secondary projection zone of 90 to 94. Now, where this comes from is the swing low, swing high analysis techniques that we use. So if we go back to the weekly chart here, and we use this cycle trough here low, and then that initial cycle peak here, we have, call this our minor cycle peak, and then the trough that was put in, and you can see that we have a first projection extension of 61.8 up here around 87, and then you get into that minor fib extension target zone of that 78.6 to 100. So that is what it would look like on that intermediate time frame. And then when you zoom in here on the daily, you can see that that first target zone of about 87 to 90. The reevaluation levels come in. If we see a close below 71, that would require me to reevaluate that upside projection. So I don't want to see a close below 71, which would be just below right now, that slim ribbon. And then if it breaks the 78.6 of this cycle low to this current cycle peak here that is not the peak yet, we don't know that, but this is the high so far in the cycle. If we get a breakdown below that, that would warn me that the overall long side bias is in jeopardy. So that's what I'm looking at in an overall some of the evidence perspective. And then when it comes to what signals suggest the trade setup is a go, we have our multi-time frame grid here going from left to right, a weekly chart, a daily chart, a 2-hour chart, and the 15-minute. Since our directional bias is driven by our weekly chart and our daily chart, and on both of those, as I've already explained, it is very positive overall conditions. Then I would look at the 2-hour to give me some signals in terms of potential resumption opportunities. That would be the slim ribbon PO firing. That would be also if the reversal scout turns back up, that would suggest to me that there's likely another up leg in motion. This is a scenario where over the next week or two, there could be some pullbacks, but ultimately based on the current structures and momentum, we should see that continuation of the overall upside advance. That's a look at Square. Back to you, Slim.
All right, that was fantastic. Great work, team. Just a really good example of the type of analysis we do. Of course, we encourage all the viewers to become members if you're not, or upgrade to get some of these features that we're using, and you'll be able to work the analysis that we show and also do your own analysis and see how your analysis lines up with what we're bringing. So great work. That's it for our trade planning session with the askSlim team for this week. All right, this is where Matt does a review of askSlim services. This is a great look at what, some things that we offer, because there's no way to bring everything that we have right now, because that would take a long time, but Matt does a good job, and he's going to show you a great special that we're offering now. Matt, take it.
All right, thanks, Slim. Okay, so I'll try to be as brief but as thorough in the segment for those of you that are new, but even for those of you that are currently with us, maybe you're a free member or have Snapshot Lite or in level 1, level 2. As Slim mentioned, we are doing a level 3 special. It'll run for a week through next Sunday. It is 3 months, 35% off. So that's a significant discount. And generally speaking, if you are new to askSlim, we have several levels of premium membership. We also have some free opportunity. We offer technical analysis services, trade planning tools, and education for various trading styles, including now a day trading service, which next week will bring to you some exciting new developments in that area, and also a special that is going to be coming out. Today, we're going to focus in this segment on level 3. So let me just run through some information for you. So level 3 will bring you an essential collection of our custom askSlim tools and resources for I'm just making sure my screen share is going. Yeah. Is that running okay, RV?
Yep, we can see
Okay,
it.
great. All right, so level 3 brings you an essential collection of the custom askSlim tools and resources for active swing and option traders. I think each one of us today, as we were running through our trade planning segments, alluded to some of these tools. So I want to show a number of them that are available as a level 3 member. And I'll do a live demo of a few of them, but I just wanted to do some static chart review here, slide review. So we have a Slimulator ranking system, and I will show this one live here in a minute. Essentially, we have a focus list of over 84 symbols, and in this ranking system, you have at your fingertips the ability to do a sort based on our programmed algorithms for our long-term, intermediate, short-term, and option bias indicator. So we take our proprietary studies and we have an algorithm that generates a market outlook for the next 3 to 6 weeks. That's why I mentioned this is great for options and swing traders. And you can sort right on that directional bias and get that outlook that is currently happening based on those algorithms that take into consideration momentum, our intermediate time frame, cycle analysis, and also our option bias indicator. You also can get access to the weekly and daily charts right from that app as well. As a level 3 member, you will get access to our chart streams. So we have, as it shows here, there's 11 channels of our custom charts and proprietary studies. So at a glance, you'll be able to view that multiple time frame information. Those include the S&P 500, the NASDAQ, the Russell, the SPY, QQQ, IWM, gold, silver, TLT, and XLE, a fantastic assortment of symbols. This does run live each day. I will show an example of this in just a second. Also, for those of you that are more active in terms of intraday trading, one of the streams that you will receive is the stock index report, or we call it the SIR live stream for the S&P 500, the NASDAQ, and the Russell. We've been doing and showing this one for now almost, I think it's about 5 years. So this is something that we prepare in advance of the market session each day. I'm going to show this live here in just a second. A fantastic tool to give you a sense of a price zone roadmap, upside, downside, support, resistance, acceleration zones, and then a general bias for the overall current intraday condition. This is something that we've adopted and expanded upon that is in our day trading service as well, and we'll highlight that next week. In the market condition monitor, now the difference between the market condition monitor and the ranking system is that at any point during the actual market session, you can jump into the market conditions monitor to find out what's happening in terms of momentum in real time. So the ranking system is going to do a job at the end of the night where it's going to collect the data, and then it's going to produce the new information after the close, because it has to take into consideration a number of other factors, including our cycle analysis. But the market conditions monitor is built on an engine that is running off of a data stream that is happening during the live session, so you can jump in, you can look at the 15-minute, you can look at the 2-hour, you can look at short term, you can look at near term conditions, and you can sort based on those conditions, based on those indicators. And we have over 100 symbols that are in the market condition monitor. Trade ideas is probably the best place to really get to see where and how our methodology is applied. Between Katie and Arvi runs the trade ideas on stocks and ETFs and futures, and there's a number of them that are published on a weekly basis. Also on Discord, there's a Q&A section for the trade ideas for both Katie and Arvi. So this is a tremendous opportunity. As you see today, as we go through the charts and then we apply that to create a trade idea, we do the same on the site, and this is something that happens on a regular basis for our members. As I mentioned, we do have a Discord server. All three of the analysts, myself, Katie, Arvi, we all have certain areas that we manage. And then also, Arvi has an office hours. So on a weekly basis, he takes 15 symbols. The higher you are in your membership level, the more opportunity you have to ask for specific symbols. And then once a week, he will publish in about an hour long, somewhere close to that, a review of those symbols. And then there can be a Q&A back and forth also on Discord regarding those. Katie manages our cycle low timing tracker. This is a fantastic tool to try to understand our process, but then also how you can apply it to trade planning, where we show the three stages of the cycle low timing process. First is identifying that key period of risk when that cycle low is due, and understanding what is the structure of that pattern as it's going into that cycle a low timing period. As something is very positive, you would expect then a more shallow pullback into those support zones. And then you want to watch closely for that positive price action that would suggest that a bottom is pending. So Katie is monitoring this on a daily basis and moving the symbols from the various stages of the cycle low timing process. So it is not only a great way to learn about the cycle low timing process, but it is also a great way to, if you are more astute and you want to apply it to your trade planning process, you can do that with this app that we have built in and offered in level 3. We also have trade planning hubs in level 3. So as we've talked about many times before, we have a focus list of symbols. There's 84 symbols that includes a set of futures, stocks, ETFs, and we have various hubs that allows access to that information very quickly. Again, we're always thinking about how to make your trade planning process as efficient and as effective as possible. With level 3, obviously, you're also going to get everything that's included in levels 2 and levels 1, and then there's so much that is available in those. But level 3 just brings a whole another level of our services in terms of the actual trade planning tools that you can get your hands on. So I'm just going to very quickly here show a couple of those. One is going to be the ranking system. And then I'm going to show chart streams. And then that'll be it for this segment. So this is the level 3 dashboard that you have as a level 3 member. And this is not a sprint. This is a marathon in terms of the journey of becoming a technical analyst and a trader. And you really will have an opportunity to make progress in the knowledge development of a methodology, learning a methodology. We're very transparent with our methodology, and then having the ability to apply that methodology in real time. You get to see that as you see it today. You get to see that all the time as a premium member. So our ranking system, as I alluded to earlier, we have the 84 symbols, and you can quickly sort on the directional bias. So as today, as you see a market shift and you want to maybe add to your alongside bias, or if you're looking for what symbols are weak when there's strength happening in the overall markets, this is a fantastic tool to be able to go into that ranking system and be able to look for specific symbols. And as I said, you just click the button and you can see the ones that are most bullish to more neutral conditions happening. And so if you are an options trader, it's a great way to find out where there's conflicts happening in the indicators that could give you some opportunities. for more conservative strategies, where you can sell some premium around that as an example. You can talk to Katie about those various opportunities, learn about that as a level 3 member with her options trade planning tools as well. Okay, so that is the ranking system. You can sort also right on a particular indicator. So as you can see, I'm doing that here to find those symbols that are appearing with either the highest level of bullishness or bearishness for a specific algorithm or indicator in the ranking system. The other one I wanted to show is our chart streams. So as I mentioned, there's 11 channels of those chart streams, and it's very simple to access. There's no special software that you need to do that. For one of the streams, you do need Zoom, but that's free. Otherwise, you can access the other 10 channels right from our site. And once the market opens, you'll see that the symbol turns green, meaning that that channel is active. So let me just click on silver as an example here, the silver ETF. You click the play button. And again, as I showed earlier in my segment, you then have access to be able to see our multiple time frame proprietary grid. We call this our chart streams grid. From left to right, you have our weekly, our daily, our 2-hour, and our 15-minute. We have a playbook that we have set up to help our members understand our process, to give you ideas and samples of bullish and bearish setups at multiple time frames. So all of that here is available inside of the resources area. And again, you can talk with us on our Discord channel as well. The last one I wanted to show you live was our intraday grid. Let me see if this is the one here. We've got a lot of grids. Now, this is a really, really meaningful grid if you're an intraday trader. And as I mentioned, next week, we're going to show our full suite of day trader tools. But this is a portion of what you get in our day trader service that is available for our level 3 membership. And it has an upside and it has a downside. This is essentially our price zone roadmap. What we're looking for are opportunities for what we call our acceleration zones, where there's an impulse that's likely occurring. So we give you a couple pieces of key information on here. The yellow zone indicates a likely price vacuum or void, where there's an acceleration that is due based on analysis that I'm performing pre-market, trying to figure out where and when those accelerations are likely to take place. Then we overlay this with our reversal scout indicator, which is identifying price and momentum trends. And you can see today, and again, this is given out prior to the market opening. This is a huge acceleration zone, probably one of the largest that I've put in place, but because we are in what I like to call blue sky territory, making new all-time highs, there's these opportunities when these appear. And if you are an intraday trader, you need to be ready for these. And we will help you be prepared for those with the information that we share. Again, this is just a monstrous opportunity. You can see how nicely this played out here as well in the IWM, and where you get up then into the resistance zone. So it really can help with your trade planning in terms of breakout areas, and then where those resistance or support zones come into play. So this is available with a level 3 membership as well. And I think that's everything I wanted to showcase today. I'm going to go back to the home page and show you one more time where you can find that special offer. And that's right on the home page. If you click to learn more, that'll take you to the level 3, a page where you can sign up. If you have questions, feel free to reach out to me directly. If you're currently a member and you want to upgrade, you can reach out via email at matt@askSlim, or you can write to me on Discord. All right, Slim, back to you.
Well, wow, that was pretty amazing. Mind-boggling the amount of content and information that we have there in level 3. Imagine what's in level 4. Wow. Anyway, we're going to move on to the Q&A here. So great work on showing that. There's a question here that is very apropos for what you just showed, looking at the special offer for level 3. And I'm going to read it to you. It's from KK. And Matt, I'm going to leave this to you to answer, because it's about how somebody can get support based on the vast amount of information that we have. He says, I'm a level 3 member from the last few weeks. So welcome, brand new member. I'm looking for some swing trades, 2 to 3 maybe, which I can choose with has a 2 to 3 week outlook. He says, there is too much information. Sometimes I get overwhelmed and I'm not able to make any decisions based on that. I would like to know, how can I use the SLIM tracking system, which shows intermediate or short-term details, and take swing trades based on that? I would like to know how I can utilize the SLIM dashboard to make swing trades. So here's somebody who's saying he's a swing trader in, you know, a 2 to 3 week holding period, and he's overwhelmed by all of this massive amount of information. How would you tell him to proceed, Matt?
Sure. Well, with all of our services, we have playbooks or video resources that are available. And as I mentioned, each one of the analysts, myself, Harvey, Katie, we do live or recorded events where we step through our process. We allude to various services within the membership. And I make it a point at least once a month to do a trade planning video where I walk through basically what he's asking for, or he or she's asking for. So I will be doing that again soon, and I will be posting that video. But I think the most important thing is to walk through those trade planning questions as we've talked about. So you start with what's your outlook period, and we have services that help you define that outlook period. And then you move to what's your directional bias, and what are your key levels, and all that information is essentially available with our tools. And I just wanted to show this as the last thing, because I didn't show this, and I think this will help answer this person's question. And let me just pull this over one more time, Slim, and share the screen. So even as a level 1 member and higher, you have access to our trade planning tools, which includes a trade idea editing template. And I think this is in terms of where do you start? Well, you want to have this context. You want to have this pulled up as you review our information, as you start thinking about your process. And again, our tools are designed so that you can very clearly answer these questions. And if you can't, and you feel you're stuck somewhere, that's where you can write to us on Discord to get some help in going through that process. Again, we're not giving advice. That's not what we do. We're going to educate you on the process of building a methodology. You can use ours as an example, and then stepping through that process to be able to convert that technical evidence into a plan. And that's what we're trying to accomplish here at askSlim.
Great explanation. Thanks. I hope that helps that user.
And if they want to write to me, if they have already, I know that there's someone out there that recently wrote to me with a similar question, and I was going to put together a personalized video response to them this weekend.
That's great. So yes, you can write to Matt, and he can give you some help. That's great. All right, so let's just take a couple questions in here. I have, I'm only going to do light crude and natural gas. Those are the questions for me in the futures. I have a couple of other questions I'll answer, and then Katie and Arvi will take over and answer a few more questions. We're going to cut questions off, so don't put any more in there because we're not going to be able to get to them. An anonymous attendee says, how often do you update the monthly charts? And where can you find them on the website? The monthly charts are updated as I need to do so, essentially, because when I'm doing my analysis on the futures and the index ETFs, often I need to refer to those. So if I update them, it's going to be on at those times. Also, if I do any big picture analysis where I'm looking at the longer term, which I do at the beginning of the year, usually also sometime in the middle of the year, then I will update all of the 12 monthlies that I regularly do look in on, or those are unique for our level 4 members. So when I do them, I post them on our regular page where we do our chart link distributions, and that's how our level 4 members access it. So if you are a level 4 member or you become a level 4 member and you specifically want to know some analysis for the monthly, normally any requests are for level 4 plus. We have only a very, very limited amount of space for that if anybody's interested in a level 4 plus. But basically, if somebody once in a while who's a level 4 member asks me for a monthly analysis, I'll give that to them, whether they're level 4 or level 4 plus. But it's not something I regularly do. Level 4 only, and also available usually only when we post them on the website when we do big picture analysis. So it's not something we do regularly, but it's something that I do refer to when I need to do so, and I keep them up kind of regularly also. The next question is from Nelson, he says, I have some puts in SPY, planning for SPY to go down. When do you think it will be below 500? Well, I'm going to do analysis in the stock market in just a few minutes, and you will get that. The reason I'm reading that question out loud is because I'm wondering, you have puts in SPY. It's not really based on any analysis that we have shown, because our analysis has all been positive. Yes, we've talked about looking for a peak and where there are periods of risk, but we've also said there's been no sign of that yet. And so what we always propose is that if you're anticipating a turn in the market, you really never do that with a position that's any bigger than about a quarter of what your regular trading position or what your regular risk is. So I'll be showing that analysis coming up, and you can extrapolate from that when you think it'll be down below. But you get, I instantly, my coach comes to play when I hear stuff like that, and I say to you, that's not something that our analysis has said to do. So it has to be when the proper alignments come in, and we'll show you that. Rogue Angel says, do you think we're in a blow off top in SPX? I will give the S&P 500 analysis in just a few minutes. Let me just review this a little bit more. I think I have answered everything for me other than just those two charts, light crude and natural gas, and then I will turn it over to the rest of the team. All right, so let's switch over to the chart on light crude. This is the light crude chart, weekly on the left, daily on the right. And it has become very strong. So Ari and I have gone over this, and Ari made a good observation that it was shifting, and I had looked at it and said, well, it's coming somewhat in alignment, it seems, with the products. So what I did was I overlaid the products on here. So there's a dash lines on the bottom here. The purple dash is gasoline. The green dash is heating oil. And you could see that there is an influence right over here. We were looking for light crude to come down over here in a significant way, and it is not. There's a potential that this cycle over here bottomed right over here, and that would be early, a little bit early, and then began to move up. And this all has been influenced by the rise that we see in the products. There's demand for heating oil. There's demand for gasoline. And that's causing light crude to be shifting and moving up. There is a potential that the cycle patterns that we were looking at are still in play, and that just is an oddball bottom, and then we're in the rising phase over here. It's not something I'm pleased with, because this really gets a little messy when the analysis starts to shift around like this, and I start to feel like I'm not understanding it. So that's what I think is going on right now, that the products have demand. It is affecting the oil market, and that may actually be shifting the oil market back, or making these cycles smaller. And I don't have enough information to be sure on that yet. There could be some kind of a pullback in here, but it sure doesn't look like what I was looking for, which was a move back down to 70. So I definitely have not been correct on this. And what we say is that it's always probabilistic. And I think the lower probability right now is what's happening. And what I thought was the higher probability is actually not correct, or it is shifting. When I look over here, this is the daily pattern, and this really hasn't changed much. You can see we thought there was a possibility that it would get up over here. We talked about it getting up to 79-ish area and then beginning to roll over. It hasn't gotten a lot past that. And I still think that there is a cycle that comes down over here. But you see this message here, this cycle syncs with the trough in March, and the target is 66.70 to 70.50. Well, that absolutely is wrong, and that has to go. It really makes sense to me that if there were a pullback in here, it would be pulling back to the support levels, which I can now move across, right across here, which you see, and those will also be rising also, and it's pretty much like this. So that's the support zone that would raise these targets over here to probably more like around 76 for a correction, or higher, because the supports are now rising on the upside. So a big improvement here in the light crude market, and this certainly looks like it will be giving a buying opportunity in the next pullback. Big demand for the products, gasoline and heating oil, and that is affecting the light crude market. The next one is natural gas. And the question on natural gas was that, you know, we were looking for a bottom in natural gas. And here are the patterns in here. And they have been amazing. I mean, when it was up near $3, we projected it to come down to $2.16. And then when it broke the supports, we said, well, it could get as low as $1.44. And it got down over here to a low here of $1.52. And now there's still a little bit of time here. Now there's sink troughs here in March. What does that mean? That the weekly and the daily cycles have troughs here in March. You can see the momentum in here is negative. It's been negative. You can see the reversal signals here on the slim ribbon PO. Again, this is a level 4 member study. And this is negative, and it's likely this is going to come down one more shot over here. Test this low here, maybe get as low as 152 again or 144. And then likely after that, we'll get into this period here where it begins to turn up and form a bottom. That coincides with what we're seeing here on the weekly chart. So I'll just put them side by side so you can see that. Here's the weekly chart. There's a low due over here. Here's the daily chart. There's a low due here. And that says to me, we want to be waiting. We want to see how this low forms and have our radar on for potential reversals during this period between early March here and late March. That really looks like kind of the timing range in here. And then begin to move up and get a pretty good rally in here. You know, even if it got halfway back between $3 and $1.60, that would be a 70-cent bounce. That would take it up to about 230 up over there to the mid-range. So that could happen sometime after this bottom is made in natural gas. So that's my look at natural gas. That's my share of the work in here. And now I'm going to turn it over to the rest of the team.
Okay, we're going to look at a couple of charts that members have requested. Jay says, looking for an entry point in Costco in the next 1 to 3 months. How would a correction from here look like in time and price? So let me share my screen and we'll take a look at Costco. All right, you should be able to see Costco now, and this is obviously a very bullish chart. Positively configured cycles, that means that they end higher than where they began. Normally, we get a turn in the reversal scout, even when it's just a short correction into the timing window. This one didn't even give us a turn, and it's just continued to go to the upside. It was basically a 1-week dip. So we're approaching this intermediate target zone that runs from 793.53 on the top, 760.78 on the bottom. That's only about $12 away. Very positive. Our correction period when we would expect this cycle to end runs from April 15th to May 24th. So that might be your buying opportunity. It will depend on the depth of the retracement. So we have this intermediate support zone that is rising as Costco continues to go up. The support zone goes up. I do want to point out on the bottom of my charts, I have the disparity index from the 34-week moving average. And you can see that that is as high as it's been. So, and if just visually, you can look and see how, oops, let me put that back. How far, this is the 34-week moving average right here, how far we are from that. So it will be important to watch for the depth of the correction there. Over on the daily chart, we're about halfway through this daily cycle. We do have earnings coming up on the 7th, so next week, so anything can happen there. We are projecting up to the 61.8% extension off the prior cycle, and that's right around 763.21. However, you do want to pay attention to earnings. Next one was Tesla. Let's take a look first at the weekly chart of Tesla. We have a large 45-bar dominant cycle here broken into minor thirds. So this aligned very well with that minor cycle trough and now moving up. However, it did break below the cycle low support. So probabilistically, we would say that we would expect rallies to fail in this resistance zone that was created from that high and this low. So that zone runs from about 230.5 on the top to 209.5 on the bottom. Somewhere in there would be a reasonable point for it to stall, and then move back down into this May time frame is when we would have the next minor cycle trough. Let's take a look at the daily chart. So we're just about halfway through this one. This is 38 bars, getting up to the very bottom of this resistance zone. And we would expect this cycle to end March 28th to April 8th. This one over here is the one that aligns with that next minor cycle on the weekly chart. So this one could configure positively, and then we would expect this one to exhibit weakness if we're lining up correctly. Next is SMH. Everyone was asking about the semiconductors. This is also very bullish. Again, I want to point out the disparity index. Look at how far we are from the 34-week moving average. We're just trading at the 200% extension of this prior cycle. That is quite a move. Nothing bearish in here. Everything is saying bullish, except the disparity index is giving me a caution signal. The timing window here is April 1st to May 10th, when we would expect this cycle to trough and then begin to move up. We'll have to see again how the depth of the retracement comes out. On the daily chart of that one, we are projecting up here to the 78.6% extension. That's 227.64. We have a rising support zone, and we'll see how we come down in this timing period. But these are all very bullish charts. The last one that was requested was snow. Snowflake Inc. Let me zoom this in a little bit. So this week on earnings, this bearish engulfing candlestick, we do have that's happening right on time. We have a timing window coming up March 11th to April 19th. We are just trading in the middle of the support zone now, so projecting down to the bottom of that, which is at 176.34, and then we have a 78.6% fib below that at about 160. The person who requested this asked about using the fib levels. So we would just take a fib tool from the cycle low up to the cycle peak, and we pay attention at these important levels. Of course, they're not always precise. So when we start getting into these zones, we watch how that trades, and that helps us to determine if it's going to go lower. You can see we have our projection here now because we've already gotten below this 50%. So we're projecting down now to the 61.8. And if it were to close below that, then we could reasonably anticipate that the next support level would be the 78.6% fib down at around 160. Over on the daily chart, you can see that just huge gap down. We might get a little bounce up here, and then the timing window is 312 to 321. So we would expect at least a retest of this cycle low support, which is where it found support yesterday. And then up into this resistance area, and then that will give us our intermediate and short-term low, excuse me. And that's the charts that I have. RV, over to you.
All right. Thank you, Katie. Let's go ahead and share my screen. We'll look at Meta. Just an absolute beast on the upside. Give it a second to load here. Okay, let's pull up the weekly chart. Again, you're seeing first you do have to note this higher low cycle base that formed here. That is what set up the move. Often we see large turns off of cycle bases. And at this point, we have now just obviously turned up, seeing a series of higher cycle highs, higher cycle lows, and positive cycles, and still have yet to form a high, as we have a low that is due 219 to right around 422. Highest odds are we would just see a small pullback here, and then for this to still turn back to the upside. On the downside, we have a zone here from 449.60 to right on 417, and these zones are rising as price makes higher highs. On the daily chart, you're seeing just a ton of obviously rally here on the upside with a low that is due 312 to right on 321. In the short term, we have this zone here, 508.16 to 526.49, only forming a series of higher cycle highs, higher cycle lows throughout. So acting still, really quite positive, not giving us any signs of a cycle peak on either the intermediate term or the short term. Highest probabilities are it would form yet another higher low, try back for the high, and then in order for it to form a peak, you have to see a breakdown and a move through that low. Until that happens, the bias is still firmly up. Shift over to the next one, which is GDX. So in GDX, what we've done here, just widen this slightly now to form a late low on that minor third. So that's this low here. We're still looking for this to turn up. Now, this is acting overall still weak. You can see the old highs back here in GDX, way up here at 45. We're hovering near lows at around 26. Okay, so still acting weak in GDX overall. However, reasonable to get a bounce into this zone from right around 28.26 to 29.70, and watch for it to sell off and then overall move its way back to the downside into this next key trough, which is only due around the late summer, early part of fall. On the daily chart, again, this has moved through this old high, so it says that on the upside, this zone is in play, 27.80 to right around 28.20. Obviously, it may move through that. We'll have to see. But if this can give a small dip here, that would be interesting for a move back to the upside like that here in the short term in the GDX with a daily low that is due 4.1 to 4.12. If we shift over finally to PLTR, we have had work on this that's overall been playing out well. There is a weekly low that is due here, 325 to right around 513, acting fine. We would look for a little bit higher, watch for a higher low flag to form, and then for this to still turn back to the upside. So not seeing any reason on the intermediate term to be bearish. And here you will see that it formed its low right on time. There was a low that was due 221 to right around 3.6. It turned up nicely. Small flags here, and look for this to still turn back to the upside. On the downside, a zone from 24.36 to 23.56. If it were to move through the 78.6 at 23.06, that would be a warning. And on the upside, we'd be looking for a move towards this level right here at 27.17 in Palantir. Okay, so that's our look at the stocks, and I will hand this off to you, Slim.
All right, I'm back. That's it. We wrapped up a great Q&A session. Remember, if you become a level 1 to 4 member, if you're just seeing this now and a free member or watching it on the internet, then you can participate in the Q&A. We invite you to do so. All right, stock market analysis and projections. First of all, important information. This slide tells you about our approach to the markets and what's important to you as you look at our analysis and then take trade ownership of your own trades. A very key aspect to being successful, especially when you get information from other sources, is that you take an ownership of each of those trades. Stock market analysis, multiple time frame analysis on projections. I'm going to look at the S&P 500 only, weekly, daily, and 2-hour charts. And then look at the MCM, the Market Condition Monitor, which we've got a little taste of already earlier in the show as Matt took you through the level 3 special that we're offering. I just want to remind you that I'm only showing the S&P 500 now, and that the analysis that we do, full analysis, is available to you daily if you become a level 1 member, and then Matt will be sending that to you in the daily stock index report. So only showing S&P now, but all of that information available to our members 1 to 4. All right, let's switch over now as we look at the charts. This is the S&P 500. And we are just in an amazing upside move. I mean, just really historic when you think about this decline over here from 4,100 to 5,100. So that's a 25% advance off of that low in basically one move. You can see that little arrow there where we're pointing to the reversal scout, which said to us that the key bottom in here had formed and that we are in a rising phase. The momentum has stayed positive. It has never told us anything other than that through this whole 25% gain. Now, when you look at the daily chart over here, you can see the momentum indicator is the slim ribbon, and that has stayed positive here. And each of the cycles in here is outlined right there, have been positively configured and positively translated. If you want to learn what that language means, take our cycle analysis workshop. But it basically says they're forming bullishly. Higher peaks, higher lows, and that is positive. You could see the slim ribbon PO on the bottom right over here, the level 4 study that we have that you can put on your Thinkorswim charts. If you become a level 4 member, this has been telling you about upside resumptions, each of those arrows forming and telling you how positive it is. Earlier in the show, somebody had said that, you know, they had S&P puts looking for, of course, a decline in the market. And everything in here says the market has told us the market's going up, despite the fact that we look for corrections at some point, and that would be natural. The market hasn't told us anything about a correction yet. Let's look at the weekly chart and look at the key numbers that we have in here. So we had originally believed that the market would peak way lower than this. Market got through resistances and continued to storm on the upside. Now here we are. I had said that, you know, this level over here around 5,100 really to me was my upside target for the whole year on the outside. I thought it would stop lower in the first part of the year and then have the pullback that we're expecting and then get to this level, if it could, late in the year when we were believing that the bull market would continue into that second half. Now the numbers right over here, this is about 51.50 right there. So we got to 51.29 today with right now with a couple hours to go in the market, it's up 32 points. And that's amazing that it's gotten up to this level. There's a monthly extension right over here that it got through so far. And then these fib extensions right over here. This is the dominant 127 and 138 right there. Those are important numbers. And on the daily chart, I'll show you what those look like also. And here's the extensions from that daily chart. With the risk over here, as we're showing you, March through May. So some point over here, we're expecting it to turn down and correct into the May timeframe. So that means that we're pointing to the trough of these cycles over here, and this yellow zone, the period of risk, to occur sometime between these timing lines. So that would be late April to late May, right in there is the range of time. For the low, it could peak over here anytime and go into a downside correction. You see what it did over here when this when the momentum turned negative is the reversal scout told you so right over here. That, and then it went to the correction right over here, right to the trough. And we expected the trough late October right over there, and it came late October. So that was a bullseye by us at that point. And now we had originally looked, and you can see the ghosted cycle here for this trough to come in April. But as we saw the patterns change on the daily chart, we pushed it out to May. We didn't push it, the market pushed it out and told us to look for that trough maybe out in May. This could still come up in here, and yes, 5,200 is in range right over here where these extensions are right there. So it doesn't have to peak right over here. The market will tell us when it's ready to do so. When I switch over to the daily chart, this has the construction in here where we show structures of the market. And you can see the bullish upside movement in here as it comes down and finds support on the slim ribbon in this upward channel that it's trading in. And now trading in this upper half of this, which is the more bullish occurrence when it gets into the top of the two channels in here. It's essentially a cloud that we create in here that's dynamic and changes as the market does. So what we're looking for is that there is likely to be a correction in here. Now, if it can hold up in a positive way, then we would expect it to get into this support area, which isn't very far on the downside. It's only let's say 50-50 to about 5,000 right over there. The bottom of that channel right over here is at about 49.64. So this is if the somewhat bullish shapes continue and it doesn't break down. Under that 49.20 level is a breakdown. If that happens, then the weekly chart will likely be peaking, and that would tell us the big correction is likely starting. But right now, we don't have any sign of that. On the 2-hour chart, I'm going to give you a way to get an earlier peek at when that would be. But right now, this is still bullish. Everything that we look at in here is bullish. It says it's very likely that the market will be moving to the upside still. Even after it corrects in here, it will then you'll then get into this period here where you can see that there would be another rally somewhere right out over there. So that is the look at the S&P 500 and the weekly, and on the daily, still very positive when I look at that. Now, I'm going to bring over a little different chart in here for you to see, and that is the 2-hour chart. I'm just going to bring this up right here and set this up so that you can see. And bring that out a little bit. And this is the 2-hour chart right over here. And this gives you a very, very good look at each of the smaller cycles that make up the daily chart. So this uptrend that you see right over here, and I'm just going to show you both the weekly and the daily right here. There's the uptrend on the daily on the left, and this is what it looks like on a 2-hour chart. There are cycles in here, and on the bottom it shows you the cycles as if it were as if it were just neutral, moving, in a sideways way. And this is showing you actually the translations on these cycles. These dark lines are where the daily charts made their lows in these support areas, as you could see. And now you could see we are still tracing out positive cycles. So you have this positive one here, and that bottomed here at 57.29. And then began to move up again. So we are now in this rising phase right over here. Looking at the daily chart, I showed you right over here where the important low was at 49.20. Looking at the 2-hour chart, 50.57 is now a very important level. If it can come down and correct and break 50.57, it will tell you that the daily chart is likely peaking and the probability is going up that it will have a sharper decline. But you'll have to break that daily important low to tell you that the weekly correction is going on. So this, you could see, still very positive translations that we have in here on these cycles, the bottom coming way up over here. And here you could see the slim robe and PO on the bottom. See this signal right over here? It said to you, resumption of the upside momentum is likely, and that's exactly the spot that it came over here. So that is the look at the 2-hour chart. Let me just get a little closer look right in here, because this is such a good chart right over there. And it shows you the very powerful upward cyclical patterns that we see in here. And that shows you right over here how it relates to that advance on the daily chart. And then looking right over here, how that relates to the weekly chart. So this is really advanced multiple time frame analysis I'm showing you. And every single thing I showed you just now is positive. If you are going to be buying puts or trading on the short side because the market is likely to have a correction, you are trading against the grain. And it has to be very small, because the risks are that this market will continue to move to the upside. I want to bring in the our market condition monitor right over here so that you can see right here, and Matt showed you this earlier, and I'm looking at the intermediate time frame right over here, and it shows you all three are very bullish using our built-in algorithms, and looking at all four, actually, the Dow also right over there. So that's our built-in algorithms for the intermediate. If I go to the short term, for those of you that are shorter term traders, those that would use the 2-hour through weekly, right there, you can see all of them bullish. The diamonds are bullish. The other ones are very bullish. On the near term, which is a short-term swing trader, like people All of them are bullish, except the diamonds are not quite that bullish. And those of you that are level 4 members are the ones that get the this version right over here, which has the 3-minute chart in there. And you can see that what's going on today is it's starting to neutralize in the Russell. That is telling you that the Russell is the first one in here on the intraday basis to be weakening. So back over here to the intermediate, you can see huge strength. Let's go back to short term and just look over here at setup conditions, and you get an idea of the very bullish ones and the very bearish ones on a short term. Let's take a look here, and you could see all of these that are very, very bullish on the short term. And that's with our built-in algorithms. Look at all of these, how they're fantastically bullish on the short term. And then I'm going to go here and take a look at the ones that are bearish, very bearish. And you can see wheat, Boeing, Pfizer, Apple. How about that Apple showing up here? Starbucks, Roku. These are bearish, and our team has been all over Apple. I said that earlier in the show as negative, and we really get a ton of help using this. So that's the short term right over there. And then you can decide if you want to be in the trader version, if you want to be in the time frame version, and see the individual time frames right over there. And that gives you the reversal scout and the slim ribbon right over there. That's the 2-hour right over there. There's the daily right there, and the weekly and the monthly that you can even see those conditions. So this is one amazing application which is available in that level 3 special that I just showed you, and that is a look at the stock market, just super bullish until it tells you something else. Key those numbers in that I told you about, because those are the ones that are going to tell you that the market is changing. Until the market tells us it's changing, we have to maintain this bullish stance, no matter about valuations, no matter about how extended it is, no matter anything else. We have to respect the market, and we are agnostic in the way we do our analysis, and we want you to be the same. Team, that is going to wrap us up after I tell them about this special offer. So get ready to say goodbye. Level 3, Matt really showed you a lot about what is on our level 3 offer. This will be available only until a week from Sunday. 35% discount. You can get so much of what I just showed you. $232. That's only $77 a month versus $119. Sign up, click that learn more button on the front page, and that will give you a great look at what's offered here in level 3. If you're new to askSlim and just watching this for the first time, you want to learn from this team of pros, go to askSlim.com and look around and sign up for free, or sign up for our Snapshot Lite, and that'll give you a good idea as to what we bring. That's it, guys and gals. That's an hour and a half on this show. I think we set a record.
Great show,
Incredible.
guys.
Yeah,
Thank you all
great
so
show.
much.
Yeah.
We'll see y'all in 2 weeks.
Yeah. Thanks, team. Thanks, everybody.
Take
Have
care.
a great weekend, everyone.
Okay. Bye-bye.
Bye-bye.